Great. Thank you very much. My topic is, as stated, the effectiveness of tax incentives for small and medium-sized entities in South Africa, an analysis of Section 12 Cap E and Interpretation Note 9. I am Riley Carpenter. I'm based at the University of Cape Town in the College of Accounting. And my co-researcher is Sunuri Subramoney, who is independent and based out of Dubai. So, in terms of the introduction, small and medium-sized entities are crucial for job creation, economic growth, and poverty reduction. That's extremely important in South Africa's context. And our National Development Plan emphasizes supporting these small and medium-sized entities for inclusive economic growth and transformation. This topic is a tax topic, and income tax is perceived as a barrier to business growth, especially small business growth in South Africa. The issue that we have is that this Section 12 Cap E, being an accelerated depreciation allowance for small business corporations. I'll get onto just now what small business corporations are defined as. It's supposed to be stimulating growth. But the effectiveness in achieving that goal has come under question in the past. So in terms of my methodology or our methodology, it's a qualitative study using doctrinal research. We use document analysis and specifically textual analysis to extract meaning from various documents. Most of those documents are the Tax Act, interpretation notes, which is guidance from our South African Revenue Service, the Tax Authority in South Africa, and other such formal documents. The process that we followed is we established the purpose of the tax section, 12 Cap E. We investigated the definition of a small business corporation. We used tax stats to analyze the impact of the policy on those small and medium-sized entities. And we also then reviewed prior literature on the SME sector's role in terms of the aim of the study. So, an overview of the section. The section provides accelerated allowances on assets which are qualifying small business corporations. Under normal circumstances, that write-off period would be either 4 or 5 years. However, with this accelerated allowance, we can either get an immediate write-off in the year of purchase or the year of acquisition, or over a 3-year period where 50% is written off in the first year, 30% in the second, and 20% in the third year. Interpretation Note 9 is guidance from our tax authority, SARS, the South African Revenue Service, on how to apply Section 12 Cap E. Because it is just guidance and it's not legislature, it is not law and is merely guidance. The intended purpose, as communicated by SARS and the government, is that Section 12 Cap E is supposed to support SMEs' role in the economic development and employment in the country. It's supposed to encourage fixed asset procurement or capital asset acquisition or development to help stimulate entrepreneurial activity. And it's supposed to aid the growth of Black businesses and increase Black participation in SMEs in the country. But what are the key issues with small business corporation and its definition? So firstly, there's a legal and shareholding requirement. The requirement is that all shareholders have to be natural persons. And if they are natural persons, it prohibits institutional investment, such as venture capitalists. And so one of our recommendations is that we allow corporate shareholdings, but not all corporate shareholdings. There must be a limit there. We suggest up to 33 1/3%, so up to a third. But any additional allowance for corporate shareholdings would be advantageous. From a gross income perspective, currently the small business corporation, that SME that meets the definition, the limit of gross income that they're entitled to earn is 20 million rand. That's very restrictive compared to other Department of Trade and Industry classifications. So our recommendation is to increase that limit. We suggest 50 million. It could be a little bit lower, it could be a little bit higher. And also, coupled with that potential increased suggestion, we suggest looking at different economic sectors and having different limits in those different sectors. The business activity requirement of the small business corporation definition excludes entities with more than 20% of their income coming from investment or personal services. The goal here from the legislation is to exclude lifestyle businesses, but in reality, many professional service firms disproportionately receive incentives, and so therefore, as an example, 34% of Section 12 Cap E recipients are in finance, real estate, or medicine. And so they only make up 3.5% of SBCs. So our recommendation is that not to change the legislation, but to change the guidance within Interpretation Note 9, and by clarifying what personal services entails, to be able to be a bit more specific. What challenges impact the section's effectiveness? So there's a compliance burden. These SMEs often lack tax knowledge. They find tax compliance costly. On average, it costs 7,000 Rand per year in order to be compliant with tax. And a lot of small businesses perceive it to be a painful loss. I suppose not only small businesses, but everyone considers compliance to be frustrating and painful. Within the SME sector, there's low awareness and utilization of the section, and there's asymmetry of profit and losses. So this allowance will only apply, or rather, profitable entities will be the only entities that can use the section, because if they're making a loss, they're not entitled to the depreciation allowance. 40% of qualifying small business corporations have assessed loss, and so therefore 40% of these SBCs can't use the accelerated allowance. So therefore, we've got to question the role of SMEs in South Africa. If we are assuming that SMEs are the primary drivers of new job creation in South Africa, then we need to encourage growth in the sector. At the moment, we have very high failure rates. SMEs have very short lifespans. 70% of SMEs fail over a period of 2 years. Their lifespan is only 3.5 years. Many of them are survivalist businesses. They pop up in order to help sustain people's livelihood in South Africa, especially considering our high unemployment rate. While these small and medium-sized entities have potential, current policies like what we're looking at here, Section 12 Cap E, largely benefit formal businesses. But in South Africa, we have a significant portion of the economy as informal micro enterprises, which offer the greatest potential for poverty alleviation, and these are being neglected. And so therefore, the section that we're looking at in the Tax Act may not be promoting the growth where it's needed, being in the informal sector rather than formal sector. So what are the effectiveness of tax incentives? International research suggests that tax incentives alone have limited impact on SME growth, and it needs to be coupled with other benefits. The research indicates that subsidies are most effective. Section 12 Cap E offers a minimal benefit in South Africa. The benefit that it gives to the SBC is roughly about 4,500 Rand per qualifying SBC. But as we stated before, 40% of SBCs don't qualify for it. And because it's an allowance section, it's primarily a timing difference. You get the allowance now, but when the asset is sold in the future, you then have to pay tax on it. So it's not really a true saving. So in total, it only really benefits a very small percentage of SMEs. So what do we propose? We propose a refundable compliance rebate. We recommend replacing Section 12 Cap E, so taking that out of the legislation and replacing it with the refundable compliance rebate. Why do we suggest that? A uniform rebate is more equitable. especially for smaller businesses where compliance costs are a greater burden. They gain the benefit of the compliance rebate going against the tax that's payable. It helps with it decreases the complexity of the tax, and so by decreasing the complexity of the tax, it increases then compliance. So in terms of a feasibility, we suggest 15,000 Rand, although that can be slightly higher, slightly lower. The 15,000 rebate would cover the compliance cost, which, as I stated previously, was just over 7,000 Rand per year. Our recommendation is for those businesses who are currently in a loss-making position, we recommend a carry forward provision, which would then allow those businesses who are loss-making and don't have tax payable, who then can't utilize the rebate, to carry that amount forward to the following year. Obviously, there would need to be some caveat there in terms of the business attempting to earn income. So in terms of our key recommendations, from a shareholding perspective, within the definition of small business corporation, we recommend changing natural shareholding to include a corporate shareholding limit. We recommend a third to allow venture capitalists and other institutional investments to invest in SPCs. In terms of the gross income limit, the maximum amount that the SPCs can earn, we recommend increasing those limits to align with the Department of Trade and Industry's classifications, and then potentially looking at different sectors within the economy and potentially changing those limits within those different sectors. From a personal services definition point of view, we recommend removing the wide interpretation of what personal services is from Interpretation Note 9, and recommend providing explicit guidance. And then in terms of Section 12 Cap E itself, we recommend replacing that accelerated allowance with a compliance rebate that is refundable. That will then come off the tax that is payable, and for those businesses who aren't able to utilize it in a certain year, for that amount then to be carried forward to future years. So in conclusion, Section 12 Cap E in the South African Income Tax Act is not effectively stimulating growth or job creation, which is its specific intention, as communicated by the government. Its impact is limited by issues with its definition, challenges with compliance, and its inability to assist businesses who aren't making a profit. Informal businesses, which in South Africa are key for inequality reduction, aren't being targeted sufficiently here. And we recommend a refundable compliance rebate, which would then be more equitable, and it will be justified in assisting smaller firms rather than larger firms. In terms of future research, we recommend investigating the link between SMEs and employment growth or transformation, and looking at other broader tax incentives, don't limit it to Section 12 Cap E, as well as looking at the impact on compliance costs. Great. Thank you very much.